In my last video, I shared 8 stocks and cryptos that I think would perform very well moving towards Metaverse. And today I will look closely into the price action of each stock and give my suggestion of entry price. But none of the information is financial advice. Take your own responsibility for your own money. Don't just listen to a random guy on YouTube. I'm just here to entertain you, and if you appreciate my entertainment, then smash the like button and subscribe. That's all I need. Now let's get on to business, shall we? Here's the list of 8 stocks and cryptos I recommended in my last video. Please watch my previous video first so you will understand why I recommend them. Among all these 8 stocks, Amazon and Microsoft, you should consider up to 10% each allocation, but not more than 10% each. And in the remaining 6 stocks, I would recommend putting a maximum of 6% of your portfolio in each of them. The first one, ASML, currently is trading at $691 as of closing price on December the 9th. It corrected already 15% from its all-time high at $778 to as low as $662, and is currently sitting just above the 21-week moving average. Now, historically, when the price retraces back to the 21-week moving average in a strong uptrend, it is usually a very good buying opportunity. As you can see on this chart, whenever the price retraces back to the 21-week moving average, like here, 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 and here, and here, it always bounce back up again, with some exceptions like the 2018 crash and the March 2020 corona dump. But otherwise, 21-week moving average always hold as a strong support. But we also need to take into consideration the overall market condition, especially nowadays when the Fed tapering is expected to accelerate in the coming month. If you don't know what Fed tapering means, here is a very short explanation. It means the Fed is slowing down the Treasury bond purchase at a faster speed and preparing for raising the interest rates eventually. And for us investors, this means the money printing is soon over. The steroids that stock market has been on will be pulled off very soon. We have seen the market reacting violently in the recent trading days because of the Fed shifting view. So I think short term the volatility will increase, meaning large price swings are to be expected. You can think of the market as a child throwing a tantrum at the moment. All the emotions are coming out and it's trying to price in the faster tapering and an interest raising event. So currently for ASML, I am nibbling little by little at the price range of 670 to 680. Well, nibbling means if you want to buy 100 shares of ASML, you don't buy it all at once. You buy maybe 20 shares first when the price hits your entry target, and then wait, see how the market condition is going. And if the market gets more emotional, I would look for an entry price at around $645 to $655. Then maybe you can add 40 more shares with price around $650. And if the price goes back up and seems not coming down anymore, don't chase the price. Don't FOMO in. Always look for another entry at around the 21-week moving average level. Patience is the key in the market. Sometimes it feels like the price has left the station forever and you will never get it, but only to find out after a few weeks that it's coming back to pick you up again. Obviously, this is not financial advice. I am only telling you my game plan, and no one can predict the emotional child of the market, so always approach with caution. Next, Nvida. Currently trading at $304 as of closing price on December 9th. It also corrected 19% from its all-time high at $346 to as low as $281. My ideal nibbling price is way under $300 at around $270 to $280. And my heavy buying price will be around $250 to $260 because I think Nvidia is a bit overpriced compared with other companies in the semiconductor and chip industry. Although it has been performing very well in the past and it is the leader in this industry, Still, I'm a bit cautious because on this chart, Nvidia clearly has had a parabolic run-up to recently. And moving forward could be a consolidation period around the $300 to $250 area before it takes off again. And during the consolidation, it usually provides good buying opportunities for us. But again, not financial advice. Next, Amazon. Currently trading at $3,483 as of closing price on December 9th. Amazon has been bouncing between the $3,550 and the 21-week moving average for over a year now. You can see it's from 31st of August 2020 until now. It's more than a year. So clearly, this level of 3,550 is a strong resistance level for Amazon to break out. It tried already twice and failed. However, the more it tries to break out, the more likely it will succeed in the end. Maybe the third or fourth attempt would succeed. Let's wait and see. And meanwhile, since it has been consolidating for such a long time, it provides good opportunities to accumulate shares, and the price range is getting tighter and tighter now. If you don't have any shares of Amazon, I would start nibbling when the price bounces on the 21-week moving average, which is currently at around $3,426, and buy heavily more when the price bounces off the 200-day moving average, which is at around $3,350. Once again, not financial advice, and I understand Amazon comes with a big price tag. If your capital allocation does not suit such stock, then the next one, Microsoft, is a good alternative. Currently trading at $333 as of closing price on December 9th. Microsoft has been on a steady growth since 2013, and its stock price has performed so well the past decade, and I think Microsoft will continue to perform very well in the coming years. You can see its price is consistently staying above the 21-week moving average. Here's one exception, the Corona dump again. Otherwise, the 21-week moving average always provides a very strong support, so it's a very good buying opportunity there. And currently, I'm looking to add more shares if the price goes back to the 21-week moving average, which is around $310. But once again, not financial advice. The next 4 stocks and cryptos are much more volatile than the previous 4 stocks. If you are risk averse, maybe it's not for you, but if you want to try out, I suggest maybe only allocate 1 to 3% of your portfolio to them and see how you feel about them. Now, Unity Software, currently trading at $140 as of closing price on December 9th. It had its parabolic run up to $210, and now it collapsed 35%. So it's a good opportunity to buy some shares. But Unity hasn't demonstrated its profitability yet, and it may take a couple of more years until it's profitable. So I'm not buying heavily, and I am currently looking at an entry price of around $132 to start nibbling. This is the 200-day moving average. And if the price goes down more, I will continue to nibble on the way down. Next, Matterport. Currently trading at $24 as of closing price on December 9th. It has a similar price action as Unity with a parabolic run up to $37 and then collapsed almost 40%. Matterport is also not profitable yet, which is why the price is extremely volatile. I'm also not buying heavily, and I'm looking at an entry price at around the 90-day moving average, which is around $21 to start nibbling. And if it goes down more, I will continue to nibble on the way down. This is of course not financial advice. Now comes to the crypto part, and ETH is no doubt my favorite. You can do so many things on the Ethereum blockchain, engaging in DeFi, NFTs, and Metaverse. ETH has so much utility, and the demand of ETH is growing bigger and bigger. The price is currently sitting at around $4,174. and it has been on a rampage since the corona dump, almost 50x since the bottom of March 2020 at $88. But this impressive performance also comes with a high volatility. Since the March 2020 corona dump, ETH had multiple 30% to 60% drawdowns, and the recent one being a few days back on December the 3rd with 28% down from its all-time high. Well, if you are not used to the crypto market, this certainly is a roller coaster ride for you. If you think the roller coaster is too much for your gut, then ETH might not suit your portfolio. But if you think your gut can handle it, you can nibble some ETH at around $3,950. It has a strong support there, and the price bounced off this level multiple times already. The next level to watch is at around $3,680. And the lowest level that I think ETH might go down is at around 3,400, which would be a wonderful buying opportunity. But if the overall market meltdown happens, ETH could go much lower as well. The last one is Polkadot. Polkadot has a lot of potential, but the current chart pattern is not pretty. It's been on a short-term downtrend recently, and it already corrected more than 60% since its all-time high at $55 a month ago. There is still no clear sign of trend reversal yet, which means the price could potentially go lower in the short term. If you are long-term interested in Polkadot, which is a very solid project, you can start nibbling at the current price level of around $25. And if the price keeps going down, you keep nibbling. Next level to watch is around $19. Same as ETH, Polkadot has extremely high volatility, so make sure your guts are prepared for it before you put your money in it. And once again, this video is only for entertaining purpose. None of what I said should be taken as financial advice. But if you enjoyed the video and would like to have more of such content, then please smash that like button to let me know. You can also leave comments to tell me what content you'd like to see in my future videos. And don't forget to subscribe if you haven't already. That's it for today. I will see you in my next video. Bye!